Hey traders, welcome to this week's Forex Focus, a show where we look at the currency markets and we look at the opportunities that could be setting up in the major currency pairs for the week ahead. Now, like with every week, we're going to start off by recapping what happened in the previous week, which usually gives us a bit of context, a bit of an idea as to what's going to take place next week. Now, last week we were looking for some major moves in the currency markets, and they did start off like that. We had some big moves. I was able to take some profits on some of my positions, but then by the end of the week, actually the market sort of started to go sideways. So we didn't really get the follow through that we were expecting. I mean, with my community, we were looking at the pound dollar and some of the pound pairs on Tuesday. We're talking about it in the community on the back of some of the one of the Bank of England governors coming out and talking about the fact that they were looking to raise rates more aggressively. You know, and inflation was still something that was paramount and top of their minds. And we saw as a result of that, the pound obviously rallied. But then going into Wednesday, Thursday, Friday, we then saw that actually the markets, we didn't get the follow through that we wanted. So we didn't get the triggers that we wanted there from some of our positions. Now, from that perspective, it's not a bad thing. You'd prefer not to be in a trade and then actually be in one that's obviously gone against you. But it is a little bit frustrating on some fronts because, you know, we had the data there last week. We had some of the economic news to be able to drive the markets. As I said, we just didn't get some follow through. Now, the data that came out last week, we had the ISMs out of the US and they disappointed the markets. And then we had the RBA come out. They held rates where they were. I think the biggest surprise was probably from the Reserve Bank of New Zealand, who hiked rates 50 basis points, which is absolutely not what the markets were expecting. But then kind of testament to the fact that there wasn't really any follow through there. If you take a look at the New Zealand dollar and some of those pairs, you see that even though it rallied off the back of that news, within the 4 hours following that, actually we got a complete retracement, and then going towards the end of the week, actually the New Zealand dollar got sold into. Then roll on Friday, we had the non-farm payrolls. They disappointed a little bit to the downside in terms of the numbers, but the unemployment rate actually came down as well. So as you can see, we've got a bit of a mixed bag there in terms of the data. Now, next week is looking like it potentially, I say potentially, there always could be a catalyst. Whether we get that follow through or not is something else. I think one thing that we've got this week that we didn't have last week is, last week obviously we had Good Friday, and by the way, happy Easter to everybody here that's watching. So a lot of the markets were obviously closed on Friday, so that might have been some of the reason that people weren't willing to take positions. We don't have that this week, so hopefully and potentially we'll be able to get some real movement in the markets. We have inflation data out of the US. We've got retail sales out of the US. Both of those are really, really important, particularly the inflation data. If that doesn't come down significantly, then we can sort of almost guarantee that at the next Fed meeting, they're going to raise interest rates. If it does come down significantly, well, that's going to just sort of confuse the markets that little bit more, because with the negative ISM and the slightly negative employment data, the markets might start might start to factor in the fact that the Federal Reserve may not raise rates at the next meeting. But obviously that remains to be seen. We've got GDP out as well. We've got the balance of trade out. No, we don't. That was last week, sorry. We've got the Bank of Canada interest rate decision as well out next week. Then out of the UK, we've got the GDP numbers. So we've got a fair amount of data out there that potentially could move the markets. Now what we need to do is we need to go and take a look at the charts to see where the opportunities may be from a technical perspective. Because remember, even though we may have a view on things fundamentally, and we may have an expectation of where things are, ultimately we need to have a way of defining our entries, our exits, our targets, and all of that is done from the chart perspective. So let's jump across to the charts and talk about that. We'll start off by looking at the Aussie dollar. Now, the Aussie dollar here is very, very interesting. What I want to actually do is, if I jump in here and go out to a week chart with some of these, first of all, look at this on the daily for a second, and you can see that on the daily, it doesn't look like the market has really gone anywhere. It's not telling you a lot. We've had this trend line in place for a little while now. We've been waiting for this trend line to get broken. It broke it last week, but it didn't break it with any real momentum. When I'm looking for a trend line break, I want to see momentum through there. We didn't get that. The market poked through, it then poked back up. So I wouldn't consider this a break. I would still be waiting for the market to break below. And And instead, or in fact, what I might do is I might even just adjust the trend line here a little bit like that. All right. So from the daily perspective, we still are, we still believe that the market is going to sell off, but obviously we're waiting for this trend line break because it looks like the markets have been going sideways. But if we go and jump into the 1 week chart for a moment to see the complete weekly price action, you'll see that actually it was a pretty bearish week. So even though the markets did rally and they rallied up to the highs of 0.6792, by the end of the week it was sold all the way back down and it closed at 0.6660. So we've got a big move there. At one point this looked very bullish. It looked like the markets were going to break out to the upside. So actually looking at this price action here, my expectation is that we will get that trend line break and we will see the markets move lower going into next week, assuming obviously we get the catalyst there. But I think that if we get a big break, a momentum candle beneath this trend line, then that's going to be a really good signal for us to get short. So certainly keep your eye on that one. If we then go and take a look at the euro dollar here is one that's been a little bit frustrating. I actually took a position in this a little while back, managed to take profits on this. I took another position on this one. No, I didn't actually. I was waiting for the position over here at the top. Sorry. So if you look at this candle over here, this was the momentum candle where I was expecting to be able to get the follow through. I didn't actually get that, so I didn't get taken into the market in this one. I know some of my community got in on this previous candle over here. They'll be sat there with, maybe a little bit of a loss. Maybe some will be at break even, but essentially this market it threatened to move to the upside. It didn't do that. It moved sideways. A little bit frustrating, but I think looking at this on balance, the market probably still moves to the upside. So I think that, looking at the data from last week and everything, potentially the market will be able to give us a bit of follow through, break to the upside over here. The only thing there is that if we look at the data that's due out next week, if we get, really sort of like aggressive inflation data. So I think the markets, we just take a look here for a minute. The markets are looking at forecast 5.6% core inflation and the inflation rate of 5.2%. If it doesn't drop below that, so, let's say, for example, it comes out 5.6 or maybe even a little bit above that, then I think that potentially we will get a bit of a sell-off here because the markets will start to factor in at least a little bit, maybe a 25 basis point hike at the next meeting. If this comes down significantly, then I think we see the dollar get sold. And what that will mean is something like the euro dollar, we will get follow through into here. So look out for that. Of course, we've got this resistance level up here at 1.1033. That's kind of in our way there. So if you're feeling more conservative, you wait until the market's broken above that level. If you're feeling, aggressive, then my entry at the moment is just placed just above this candle over here. I'll keep it in for another few days, as long as the market doesn't go against me. If the market starts to sell off here, I'll kill that order and wait for another opportunity. But at the moment, that order is still there, and I'm still looking to trade that to the upside. The pound dollar, I believe last week we were looking at the pound dollar and I was saying, look at this, it's trading up towards this resistance level. I think this is going to get sold into. So our expectation is that we were going to potentially get a sell-off there. What actually happens, one of the Bank of England governors came out, as I said, and they were more hawkish than the markets were expecting. So completely threw the markets a bit of a curveball. And the markets rallied really aggressively off the back of it, because what he came out and said, whereas we thought that the Bank of England were paying attention to the data and they weren't going to be as aggressive as they could be, and indeed they're probably behind the other central banks. What they came out with last week was saying that, inflation is a big focus of theirs, and it's nowhere near where it needs to be, and they're willing to sacrifice some sort of economic growth in the short term in order to make things more stable in the long term. And that sort of sent the market spiraling. That's where we got this big candle over here. And as I said to my community, we're looking off the back of this over here. I was kind of expecting a bit of a follow through. I've got an order above this high of this candle over here, looking for the market to trade to the upside. What actually happened was that didn't trigger either, so the market didn't get through the highs. And that's why I place my entries at the highs, because it just gives us that little bit of extra confirmation. But as I said, we didn't get in there. The market sold off, so now the market's pulled back a little bit. I think, potentially it could sell off from here again. Just going back to what I was talking about with the euro, if inflation is high in the US, you might see this get sold into. in terms of looking for an opportunity there, you might have to jump down to something like the 1 hour chart, for example, to be able to see some decent looking price action to be able to get involved in that. I personally don't like trading that shorter time frame. It's something I used to do, long time ago. But now I like to do other things with my time. So I'm a little bit more laid back with my approach. So I would much rather miss this sell-off over here, look for other opportunities in other pairs, and trade the way that I do, which is sort of just checking my charts a couple of times a day, 30-40 minutes here and there, and just get on with the rest of the day. That's my preferred approach at the moment. But for those of you who are more active, this might be the way that you want to go. You'd have to drop down a time frame there. If I then go across to the New Zealand dollar, so this one, as I said, this was a candle over here on Wednesday. The markets rallied all the way up here. This was off the bank of that interest rate hike. And then the very next day, look at that, the market gets sold into. And then on Friday, the same with all of the other major pairs over there. We get a little bit of up, a little bit of down, but really not a lot of price action there at all. In terms of an opportunity here, the New Zealand dollar looks really untidy for me at the moment. So there's no clear direction in this one, for me anyway. So from that perspective, I'm willing to look at other opportunities as opposed to sit there and hold out for something here where it just doesn't look great. And remember, obviously I'm analyzing the major currency pairs for you here, but actually we look at over 28 different currency pairs. So even if there aren't some opportunities in the majors, there can be opportunities in other currency pairs. Now, the dollar CAD, we talked about this last week. We are jumping down to a 4-hour chart for the dollar CAD here. This is actually a really nice pullback. So this is one of the better looking technical opportunities this week. All right, we've got a nice sell-off over there. We've got a nice pullback, as we can see. If we get momentum through the 20-period moving average here, closing the other side, and then closing beneath this trend line, I think that's going to be an opportunity to sell this. So this is probably one of my top priority setups next week that I want to keep an eye on. I really think that if this triggers, then this could be a good opportunity, because technically you can see that the markets, the energy is clearly with this particular trade. It's not super choppy like we can see over here. So with these opportunities, the markets are very, very choppy. This one is a lot cleaner cut. So we've got a lot clearer price action, a nice pullback, which means that when we do get the sellers get involved there, we can be sure, or as sure as you can be trading, that they'll be in control and we'll get a good opportunity there. So looking to sell the dollar CAD. The dollar franc is holding, again, this is on the 4-hour charts, holding beneath this previous level of support, which is now acting as resistance, which is what we like to see. We've now got another mini support level in, let's get that in there. Another mini support level in at this level over here. Let's pull that there. So the 0.9033, I think that if we can get beneath that level, so if the market closes beneath that level, then we'll look at that as our trigger candle. We'll then get in on a break of the low of that candle. So you're waiting for a close beneath this candle, beneath this support line, sorry. Once we get that close, then we can get in there and look to short the market. So dollar franc, I think, is a short from a technical perspective at least. Then the dollar yen, I still think this goes lower, but it's been fairly resilient over the past sort of few weeks. So we can see that the market did get sold into earlier in the week, but as I said, then towards Wednesday, Thursday, Friday, the market then just pulled back and really didn't give us much of an opportunity. I still like this trend line. I still think that if we get a sell opportunity beneath that trend line, then that's something that we need to take. And that wraps it up for the analysis for this week. What I want to leave you by saying is that sometimes, like with the dollar yen there, it can be quite frustrating. So you're looking at it, you're waiting for the opportunity to set up. It doesn't set up 1 week, maybe the next week it doesn't either. And at that point in time, you think, why am I trading? Why am I swing trading? Or trading these long term, looking at daily candles, things like that. Maybe I should jump down to a 5-minute chart or a 30-minute chart. And that's absolutely fine. That's your prerogative. There are lots of people that are successful doing that. I used to day trade a lot, but I've got to a point in my life where I kind of, as I said, I want to take a little bit of a step back, and I don't want to be glued to the screen for 8-10 hours a day. I want to have the time to be able to do other things, spend it with my family, spend it with my kids and stuff like that. And what I've actually found is that by taking a step back, yes, it can be frustrating. Yes, there are times that you have to be patient, but I'm no less profitable than I was before. In fact, I'm probably more profitable now than I was before, taking fewer trades and yes, sitting on my hands a lot more. But what I'm able to do by waiting for the right setups is I'm able to increase my win rate. And as I increase my win rate, then what I'm able to do is I'm able to increase my position size. So whereas when I'm day trading, for example, what I would do is I'd set like a daily stop limit. So whether that be 0.5% or a full percent, that would be my daily stop loss. And I'll chop that up into multiple different positions, and that would be what I'll take on a day. Now, the way that I trade and I approach the markets from, like I said, a swing trading perspective, a much more sort of like a passive approach, I put myself in a position where I can take, 1-2% risk on a trade, and sometimes even more if I've got a good fundamental bias behind that. So it really allows me to sort of drive my profits up whilst not having to spend as much time at the charts. And it's something that I would like you all to think about, because I know there are those times when it's very, very tempting to sit there and say, well, you know what? I'm going to trade short term. The opportunities aren't here. I've given trading the daily candles a chance, and actually they're just not for me. And maybe you've been doing this for a month or two, but actually when you look at it over the course of a year and you look at it over the course of 2 or 3 years, as traders, what we want to do is we want to be profitable, right? And trading this strategy, trading the dailies, the way that I'm sort of analyzing the charts for you here, on just the major currency pairs last year would have returned you 200%. Okay, trading this particular approach. So you can absolutely get the returns there. Sometimes you have to be patient. It was the same last year. Last year, we didn't have any real trades or any real trends emerge up in sort of until March, April time. And then there were a lot. Okay, and the same thing is happening this year. What you need to is you make sure that you stick to the system. Okay, you stick to your approach and you believe in it, and then eventually the trades will come and you'll be able to make some decent profits from it. Okay, so as I said, that wraps it up for this week. If you haven't already, please make sure you subscribe to the channel. So hit the subscribe button, hit the bell so that you get a notification as and when I release these videos. If you haven't already and you're interested in learning more about my approach to the markets, as I just said to you, I kind of gave you a bit of a sneak peek there. It's a lot more laid back. It's a passive approach, but it's a very, very profitable approach. Then hop on over to my website. I will post the link in the description beneath the video here. You'll sign up for the masterclass. I will walk you through my framework. And then if you've got any questions at all, you feel free to send me an email and I'll be happy enough to answer them for you. Okay. So thank you so much for watching. Happy Easter, everybody. And I'll look forward to speaking to you on the very next video. Take care now.